Hey everybody, it's Norris with the Norris Group. It is Friday, October 26th, and can street names actually lower the price of a house? That and much more as we cover the biggest headlines in real estate. Up on the radio show and podcast, we've got part 4 of I Survive Real Estate. We actually officially released all the video. We are still waiting for Amazon to crunch the video. They're very hard to get into because you have to close caption it. So it should be on Amazon hopefully by next week, but it is on Facebook and YouTube. So if you look up I Survive Real Estate 2018, it is there, or visit isurviverealestate.com. We are breaking it up into 4 pieces on the radio show, and this week you're going to hear about artificial intelligence. We talk a little bit more about iBuyers and what made Zillow change their mind and jump into the iBuyer space when for the last couple of years they said they weren't going to. So you won't want to miss that on the podcast, but if you want to watch the entire video uninterrupted, check out isurviverealestate.com. The Mortgage Bankers Association reported a 4.9% increase in mortgage applications in their latest MBA weekly survey. The median price of home increased by 4.8% in the third quarter, but that's the slowest rate of annual appreciation in 2 years. Mortgage rates showed some increases, with 30-year mortgage rates now at 4.86% and 15-year rates at 4.29%. Ribbon, a one-year tech startup, just raised just a cool $225 million to solve a very annoying problem real estate professionals across the board have to deal with on the regular. When selling a home, all cash offers can get bumped to the top because it's guaranteed to close, there's no contingencies, and that leaves a lot of would-be buyers that need a loan left out in the cold, especially in a competitive market. Well, Ribbon is here to solve that problem. It vets the potential borrower, and instead of creating a pre-qualification letter, this company actually guarantees the buyer is going to close and has a move-in date. So basically it acts as an all-cash transaction on behalf of a regular borrower. So here's where it gets interesting. And investors, yes, this is going to be a competition for you, especially on homes that need paint and carpet, nothing major, and that a lender will actually be able to fund. I don't think this is going to work for heavy rehabs, but the catch is it's free for buyers, and who pays for it is the seller. The seller actually pays a 1.95% fee at closing, and the justification for that is Ribbon says that there's typically a discount for all cash offers because of the guaranteed fast close. So they're expecting the seller to pay for that. It'll be interesting to see how that works, and if sellers are like, of course I'll pay for that, we'll see. If a mortgage falls through, Ribbon actually buys the house and is patient and allows the borrower to end up getting financing. So it's interesting, they could actually end up owning the home. So will it work? We'll wait and see. The latest migration analysis released by Redfin is based on a sample of more than 1 million users who did searches for homes across 80 metro areas. They found that as mortgage rates climbed, affordability in the most expensive markets, of course, it suffers, and it's driving more people to affordable and low-tax inland job centers. So places like San Francisco, New York, Los Angeles, and Washington, D.C., as well as Denver, posted the highest net outflows in the third quarter. An outflow, of course, just means a lot more people are leaving than are coming in. The metro areas seeing the biggest inflows of residents are the big cities where home prices are just a little bit more reasonable. So you've got Sacramento, Atlanta, Phoenix, and Portland, oddly enough. But hey, we've got one California city in there. Why buy one house in California when you can buy like 6 in Texas, right? This is what the story in Forbes talked about this week. Texas is a state that's booming in terms of population and business. Their economy is doing quite well. Increasingly, more Americans are migrating to the Lone Star State. Zillow pegs the median price for a single-family home in Texas at $277,000. Florida is also another popular state. The average price for a home in Florida is $299,000 for a single-family home. So both those places are about half the price of California. Is your home a shoes on or a shoes off kind of place? Well, this week Realtor.com gives an argument for and against wearing your shoes inside the house. Well, the shoes off argument focuses on a recent University of Houston study showing that more than 26% of shoes worn inside the home has a contamination and bacterium that can create some severe stomach pain and explosive diarrhea. Do I have your attention? Maybe you should wear your shoes. However, in defense of shoes on, Dr. Amesh, I think it's Adija, I'm not sure, an infectious disease specialist says, well, bacteria on your socks and bare feet are almost just as bad, so you really can't win. So do what you want. In a report released Thursday, Fannie Mae's Economic Strategic Research Group painted a picture of a somewhat gloomy near-term future, maybe not gloomy, just a little bit more pessimistic. Raising interest rates and declining housing sentiment from both consumers and lenders has led Fannie Mae to lower their home sales forecast for the duration of 2018 and into 2019. Making matters a little bit worse, the fact that affordability, especially for those first-time home buyers, it still remains atop of the list of challenges that they see moving forward. So, you know what, still the report is remaining relatively positive. We heard directly from Doug Duncan at I Survive Real Estate what he thought on the market. So if you haven't heard what he had to say, just watch the video. Who remembers the 1980s classic Nightmare on Elm Street? Well, apparently a lot of you. And just for fun, Zillow analyzed Elm Streets across the country, and there are over 1,000 cities with at least 25 homes on streets named Elm Street. The typical home on an Elm Street is worth $133,000, but nationally the median U.S. home price value is around $220,000, so about 65% higher. So Elm Street's really United States. Some are picturesque lined streets, but the question I have is that are some streets, just because of the name alone, can it possibly decrease the price? Will an Elm Street remind too many people of a horror movie and they just don't want to fall asleep and they're going to pay less for a home? I don't know. I haven't really thought about it. Is it just really annoyingly long name that nobody wants to have to write on an envelope? I would love to hear if you think a street name can actually lower the sales price. If you're on YouTube, please leave a comment below and don't forget to like the video and subscribe to the channel so you don't miss a beat. If you're on Facebook, please don't forget to not only like the Norris Group page, but don't forget to add us to your See First list and with notifications on. Leave your comments below the video. And if we miss something, share the story on our comment sections on either YouTube or Facebook, and we'll make sure to include it on our blog at thenorrisgroup.com/blog. We'd love to see you out and about. We are winding down 2018. So our very last event that we are producing, October 27th, that's tomorrow, Saturday, Cutting Edge Financial Tactics Brunch. I think we have just a handful of tickets left, but we've got close to 200 investors joining us for breakfast tomorrow, where we talk about more advanced strategies like reverse 1031 exchanges, leverage in your self-directed IRA, 1031 exchanges in your IRA. And we've got a great lineup of pros just to help us all on stage, all at one time, beating up very complicated questions that we all get as real estate investors. So I'm very excited about that tomorrow. November 8th, Technology Trends and Effects on Real Estate. You'll catch me at OC REIA out in Orange County. And November 10th, the Intelligent Investor Real Estate Conference of 2018. This is for investor by investors' very first conference. It's a 2-day lineup. They're even feeding you lunch, and they've got some really great speakers. I'm going to be there. So we'd love to catch you if you are out and about and you are in town. Check out thenorrisgroup.com and check on the events calendar, and you'll find all the upcoming events that we're going to be doing. Also, save the date. January 26th, we are going to be releasing a new timing report. More information will be out in 2 weeks, but the name of the report is California Real Estate on Borrowed Time. For more information on hard money loans, including fix and flip, buy and hold, and new construction loans for both California and Florida, check out thenorrisgroup.com. And you'll also find information on a different tab, the notes section, there as well, if you want to learn more a little bit about passive investing with trust deeds, mortgages, and notes. With that, have a fantastic weekend, and we'll see you next week.